Hey, what's up guys? It's about 5 in the morning where I live, and I hope the music's not too loud. Let me make sure it's like... Let me make sure my computer... Okay, so basically what I want to show you guys, I'm gonna show you guys today, okay? So first of all, guys, okay, 15-minute, okay? Think of this, okay? Just think of a simple scenario, 15-minute to 1 minute, okay? Wow, this is like my first time using this. I'm so impressed at like how smooth this feels. Basically, this, let me just pin this real quick. 15-minute down to 1 minute, okay? Let's say, for example, you have this move of price, right? Let's say this is like a buy side liquidity draw, okay? But you know, okay, let's say there's highs over here, okay? Internal range liquidity, external range liquidity from like swing highs, low resistance liquidity, basically like unbalanced highs over here. Okay, let's say there's a like TPD top long-term high over here, which is unbalanced over here. So what I'm showing you guys over here is basically like, let's say okay, just like I said, you see this, right? So this is the ultimately, this is the target, right? This is the target because it needs to sort of like, you know, all this liquidity over here is built up, right? So what I'm trying to say is I'm gonna try to like keep this simple. So let's say in a swing structure, you will see something like this, right? If we're bullish, right? Like, let's say for example, even at this type of point, okay, let me make this very clear. So let's say over here, if we're coming like this, we'll keep balancing price, it will balance out price, and then we'll go right, and then balance price and go right. So same scenario here, right? Boom. Okay, this is the 15-minute. Let's say for example, this whole structure that you're seeing here is 15-minute. Okay, this is a 15-minute FVG. Okay, FVG. Okay, so obviously you see the FVG manipulation and the distribution leg, right? Like this leg of price action distribution, right? So what I wanted to show you guys, this is something that you should really know. Now on the 1 minute, a lot of people push the trigger on the first, right? First tap into the, sorry, hold up. 1 second, guys. Okay, so over here, the first time like the price action comes down to this 15-minute fair value gap on the 1 minute, right? And you see this like market structure shift, you would enter here, right? Like you would enter here and then price would go higher and then would drop all the way towards the stop loss, right? The reason why this happens is because this is a point of inducement. In other words, the word inducement itself, what does it mean, right? It convinces someone to do something, right? So basically what I'm saying is, now smart money knows the fact that you depend on the ICT 2022 model. Market structure shift over here, internal term high broken, pull back, entry towards this, right? This does not work in itself. What you need to combine this at a fair value gap, let's say this is a 15-minute fair value gap, okay? You need to wait for this, right? You need to wait for this, for price to go higher, balance things out, go a little higher, and then go low, and make sure there's a proper stop hunt, okay? Like this low that's first stepped into this fair value gap, this manipulation that's first stepped into fair value gap, this is invalid, okay? What I want to make sure that you guys know is this is invalid. Now if you see even in like a 15-minute context, you will see something like this. There's one that taps into it, and there's another one that sort of like, okay, there's one that makes it go higher, and then there's another one that just like straight up taps like all the way towards here, right? And then we have the move towards the high, okay? So this is what I'm talking about, okay? So this is, what is this, right? Let's say like this is, to make it more clear for you guys, you see, this is the manipulation, you see the distribution, boom, stop hunt, hunts this. If you guys know what a stop hunt is, it's basically hunting for stop losses, because you enter here, right? Basically it would, and like let's say okay, if you put your stop loss maybe like at the like low of the fair value gap, so like let's say the fair value gap is like over here, and you put your stop loss here, you might get lucky, but you don't want to gamble with that. What you want to gamble with is putting your stop loss there. That's right, but you want to wait for this stop hunt market structure shift, because that's when we have the confluences to really go higher, right? So then afterwards you entry to go towards the 15-minute buy side liquidity drop, okay, on the 1 minute, okay? Simple as that. Now let's say for example you miss your entry, you might have another like pullback entry, So like, let's say for example, you just want to follow the overall trend. So let's say you use 4 hour for your like topmost time frame. Let's say in my case I use 4 hour. So obviously each of these structures, if let's say in like a, oh my god, I can't with Spotify, but in any structure, right guys, it's basically going to be in a either bullish or bearish or consolidating. Okay, ideally you wouldn't be trading this, especially if it's on a 4 hour context, right? You wouldn't be trading this. Now here's the thing, right? This is something that I was getting confused as well. So obviously over here in the swing structure, right? So all this is the impulse wave, okay? The impulse, okay? Correction move. It's basically balancing price ranges out. Now there are scenarios where price just like balances and goes like a lot higher and then balances and goes higher, right? So always make sure that if something like a significant low, like let's say there's always some sort of low here, right? If it's broken, it could be either a sweep or just to go higher. If it's broken, you want to make sure there's like a opposing PD array here, because the likelihood is basically like, let's say this is like a, like, okay, let me show you guys, like let's say for example you see something like this over here, okay, over here you see something like this, okay? So you see this, right? And then you see this like tap back and then it basically short in the market, right? Now this works. Now let me explain something, okay? So it's basically retracing down towards what, to rebalance some sort of fair you know, PD array. Like let's say for example, especially like internal range liquidity, like fair value gaps, it rebalances and then it just goes higher, shifts the market structure, right? So over here, overall, it's following the higher time frame narrative, right? It's basically just a small move. Now, if you, especially like, let's say, let's think of this whole structure as 4 hour and this structure as 15 minute. It's basically just like on the 15 minute, for example, it's going to be something like this, a whole market mega buy model. Yeah, do you guys understand? This is what you guys see on the 15 minute, okay? And then this overall thing is what you see on the 4 hour. Now, this move is what I'm talking about. On the 15 minute, look, it will look like this, right? Simple as that. Okay, simple as that. So again, I'm gonna show you guys the 4 hour. Keep in mind this is the 4 hour structure. Okay, PD array manipulation goes higher. Now the thing that people don't mention is that at these PD arrays, okay, sorry guys, give me a second. What is this? Okay, at these PD arrays, for example. Ooh, okay. So basically at these PD arrays, guys, they don't tell you this, but basically this is from personal experience, by the way. Over here, like at this PD arrays, let's say okay, in this context, let's consider 15 minute, okay, 15 minute entries. Okay, so they don't tell you guys this, but basically either, okay, so you want to wait for a stop hunt. A stop hunt is nothing, just like I explained. If you guys want to know what a stop hunt is, please revert the video, okay, or basically revert the stream, okay? So basically a stop hunt is nothing but an inducement. For example, inducement is just convincing someone to just do something based off, you know, what's happening, and then pull it all the way down, hunt for stop losses, and then have the market structure shift, corrective move, and then take it towards the initial draw on liquidity where it was supposed to go towards first. Like in this case, 4 hour buy side liquidity drop, right? Because it's overall following the narrative of the structure, right? View the overall market structure, like the higher time frame structure, in like waves. This was something that I learned from GIFX, and this has helped me a lot, dude. For example, like you see over here, this is the impulse, corrective, impulse, corrective, impulse, corrective, right? So it would always correct some sort of move using some sort of PD array, like a fair value gap, internal range liquidity, and then it would just go higher, right? Either that, or it would balance out to something like an order block. You get me, right? Also, one more thing. So let's say on the OTE, you have obviously like in the middle, you have OTE. Sorry. Let's say like you have OTE and then 0.5 and then you have the 1. Okay. This anything above this is premium and anything below this is discount, right? So this is basically 0. Now, if you see, let's say I've pulled this example before. So over here, if you guys see some sort of like fair value gap, let's assume this is like a fair value gap. Now, for example, let's say this is the overall 15-minute narrative. Okay, this is, mind you, this whole thing is the 15-minute narrative that you guys see over here, this OT, okay? So over here, what I want to make sure that you guys know is, now obviously you can capitalize even on this like little move, right? But the thing is, on a 15-minute time frame, there's a high likelihood you will get liquidated if you are in fact above 0.5, because this is what premium. This is premium, this is discount. So you want to always wait for some sort of discount retest PD area and then to go higher and put your stop loss at a low, somewhere like here, and then target like the BSL draw in this context. Okay, so again, same context, same sort of scenario happens even if you like flip things around. Okay, so again, it's all about sort of adapting to the narrative, right? Again, for our market structure, don't depend too much on it. Like say for example, like how do I explain this? Let's say there's a lot of like unbalanced highs. Okay, let's say like let's say there's a lot. This level is an unbalanced high. This level is an unbalanced high. Now up to this point, okay. Now this specific long-term high or inter-term high has balanced out this high. Okay, this was the previous inter-term high. Now this is balanced out this high, but if you guys see, these are all inter-term highs that have not balanced out this, because price needs to sweep the previous high, right, and then go, right? Because if not, there's going to be a lot of resistance, like liquidity in that area, right? For example, like in here, like in this area, there's going to be a lot of liquidity, for example. So what I want you guys to know is the fact that, like, for example, like all this highs, okay, at some point, all this liquidity gathered here needs to be collected again, and to create a strong high and then move lower, right? Again, but this is not to confuse you guys. Now, just because there's highs here that, like, let's say the overall structure is going bearish, right? Do not interfere and try to like go like against the trend. Okay, you want to make sure you align your low time frames with the high time frame. Okay, high time frame with the low time frame. Okay, low time frame. Okay, a lower time frame. Now let's say even in a bullish scenario, this is like the best example because it's not confusing. Like basically flip it around if you guys don't see it for a bearish scenario. But basically right here, let's say this is forward. This in itself is just a market maker buy model. Okay, so usually a market maker buy model looks something like this. Okay, so let's say there's some sort of like PD array, it rebalances and goes. Now over here, right, this is what happens. So we have the first manipulation. Okay, sorry, let's say first manipulation and pullback entry, and then boom, stop hunt, boom, market structure shift. Okay, market structure shift, pullback, and then goes higher. See, market structure shift. Now market structure shift could happen like this as well. It could just pull up and then go towards the PD area here, and then draw towards the 15-minute. Like let's say this was 15M, and this is the 4-hour BSL draw. This one. Okay, that's basically what you guys see at this specific range right here. Okay, so again, it's pretty simple if you guys get the concept behind it. It's like basically price is always moving from internal range liquidity to external range liquidity, internal range back to internal range liquidity to external range liquidity. Okay, so again, you guys need to understand the fact that price. Okay, so follow the whole order flow. So if you see the structure over here, all these price legs are balanced out. Now there could be scenarios where price legs could not be balanced out for a while, and then you would see something like this. This is normal, right? But here's the thing, right? If there's a huge imbalance in price action, there could also be like, especially if it like sweeps like a this was not the best scenario. Like let's say for example, this was like a high. Okay, there's a likelihood, like let's say, let me just like clean this. So over here, let's say like it price just like moves like this. There's a like, and this was like an inter-term high. Now unless this is a scenario where there's like resting liquidity above, like another inter-term high here, basically unswept highs over here, like at these ranges. Unless that is the case and it balances out some sort of PD area and goes higher, there is a likelihood, especially if we like, okay, there's a difference between a long-term high and an inter-term high, right? A long-term high would be like the longest, like the highest high, if that makes sense, right? So the highs of the high, okay, the very tippity top of the mountain, as in like all the liquidity has been rebalanced type of thing in that leg of price action. Now do not confuse with like something from like, look at the current trend in price action. Do not confuse with like something from like a month ago, okay? The current leg in price action, like let's say like there's something like this, and then you see this, and then ever since then, all the highs have not been like rebalanced. So this is the like long-term high, right? LTH. Okay, for example, what I'm telling you guys here is like, if this, let's say for example, okay, now I'm gonna show you guys. So over here, like let's say this was a long-term high. Now this is a scenario where I would expect a real market structure shift, of course, like a stop hunt, and then like a real market structure shift. For example, let's say like this, and it goes like this, goes all the way to your stop loss, stop hunts, and then market structure shift. Boom. Easy. Put your stop loss here, and you put your, let's say TP on like 15-minute draw on liquidity. Okay, you could enter here, you could enter here, here, anywhere. You get the point, right, guys? So basically, so it's pretty simple. So if you know the long-term high, and once it sweeps the long-term high, you can expect price, especially if it's like imbalance like this, or generally, for example, once the market structure shift has done the stop hunt over here, stop hunt. This is the stop. This is the stop that has been hunted, for example. Okay, this is the stop that has been hunted with this manipulation, distribution, pullback entry, boom. Okay, pretty simple. Again, this is for you guys. I'm pretty sure someone will see this and someone will get some sort of change in perspective, I guess. So yeah, that's pretty much it. And also look into time cycles. For example, what I've noticed is, for example, like sometimes these kind of stuff happen, right? For example, you have Asia, which consolidates, with London takes out the highs, and then NY distributes. Okay, pullback entry, boom. Right. Of course, you want to add this with, you know, overall price action and as in market structure and stuff. And then there's also this theory where I forgot the other one. I think it was if NY distributes and London consolidates, then NY if I forgot that one. I think it was if Asia consolidates, London manipulates, then NY will distribute. So basically NY, London, and Asia. And there was this other one which was like if I think it was if Asia goes if Asia distributes, I can't remember that exactly. I'll let you guys know about that. But if Asia distributes or London consolidates, then NY basically distributes or something like that. I'm not too sure about the second theory, but I'm sure about this one though. Like basically NY distributes if London manipulates the lows, that type of thing. Okay. Pretty sure like if when you flip this around, you can get the like inverse as well, like as in distribution for the as in NY Asia consolidates, London manipulates highs, and then like NY distributes lower. That works too. Anyways, guys, that's what I want to show you guys. Basically, it's pretty simple, and I want you guys to backtest what I showed you guys. Okay. Also, you pay attention to OT. OT is, I'm serious, because I've gotten liquidated when I entered from somewhere like 0.710, 0.680, 0.710. These are golden zones. If you see reversals happening from here, get out of the trade. Okay. If you see reversals happening from these areas, get out of the trade. Now that doesn't always mean. Always make sure like you hold it enough in a way. Like if you see like that's just like a pullback, just don't like get out of the trade either. But like yeah. These are like golden zones to like usually keep an eye out for, because people entry and like, you know, to entry towards the opposite at these ranges. Okay, for example, like let's say this is like the swing high and then swing low. Okay, and this is like a 0.710 or 0.680. Okay, so people usually keep like buy orders applied over here, so when price like comes to this range or this range, they expect the price to like reverse. Okay. And I'm not too sure if this is like exactly correct, because I don't really like have experience with this like fib zones. But again, some people actually do like believe in these. And again, I'm not too sure about this, but I saw this one guy who was like doing this. So again, that's why I'm still like in my current dealing price range. I would just keep a fib just to see if I come to those levels and see what sort of reaction happens. Sometimes it's also a reaction from 0.5. So one more thing, guys, if you are let's say like if you see a supply level order block and you see a huge imbalance right before that, make sure you TP right here. Okay, like at the body, at the lower of the body. Okay, over here. Like let's say you were coming here, because the likelihood of the idea overall, like let's say this was in the 15-minute. Yeah, this is a like area of displacement. Do not wait for like this price action to be taken and then go lower. Yes, it will eventually take it, but you want to just TP here at this supply level order block. Okay, because price would reverse and then like crash on your head. Okay, so you want to just TP here. One more thing, yeah, so basically in this type of scenario, like let's say this was like 1 minute, or just apply the same concept even if it's like 15-minute and 4 hour. You get the point, right? So 1 minute, think of this as the 1 minute. So on the 15 minute, what I would view this as on the 15 minute is something like this. Like this, right? And then you see this build up a price action, and then it goes higher and goes lower, right? So overall, what's happening here? Boom. Now here, this is on the 15 minute, by the way. After the stop hunt. Okay, stop hunt is basically something like this. Boom. Okay, let's say stop loss. Market structure shift. Boom. Okay. I hope this helps you guys. It helped me, so that's why I'm telling you guys. This might be the thing that will change you guys' trade outcomes. Okay, not the holy grail, but it could be something that would help you guys. Again, it's all part of the inducement, because it, you know, smart money. Anyways, guys, that's pretty much it. I was literally just doing some cybersecurity related stuff. If you guys want to take a look at, you know, starting to get into like that sort of field, just, you know, just for fun. But yeah, that's pretty much it, guys. I hope you guys enjoyed this video, or stream for that matter. And I'll see you guys. I gotta go sleep now. And yeah, peace out. Bye.